All right, welcome everybody to the client support for today, June 19th, 2024. All right, let's jump in right and take a look at the books. I, had the risk control thing shown before, so I think that's good enough for us today. All right, so in terms of books, The Art of Trading, all right, that is basically finished. So that's going to be released this year, and about 500 pages. Depends on the layout. The layout may or may not put it over 500 or a little under, but you can order that. I'll put the links on the recording, but you can go to the website and get it, or go to our Amazon page. Money management, of course, we cover in great detail, and Elliott Wave. So we got the bases covered on that. All right, software. Many of you here obviously are here because you own our software. Some do own the home study courses, but we welcome everybody who is a client of ours, but the software is available. All right, today we're going to cover the ART software specifically. So that would be this box right here. And this is the thing that gives us the pyramids, the reversals, and things like that. So we're going to cover that. And of course, if you have any questions, feel free to ask me along the way. All right, Apex funding, this is one that we are promoting here because of the fact I can give you a coupon code and save you some more money. But it's a great place to go. And I'll tell you what's kind of interesting about it. A lot of people aren't day traders, but they get the Apex account because for a fairly nominal fee, you get free data with it. And even if you stay in an evaluation account, it's not that much money per month. I wouldn't get, if you're not going to be an active trader, I wouldn't get more than one account. Just get the one account so you can get the data if that's all you need. All right. But the idea behind that is that even if you're a position trader, the same setups occur on the futures markets as they do on stocks. And the same setups, because of fractal symmetry, occur on the intraday time frames as the end of day time frames. So you can practice on the futures market in a very short time frame and get a feel for how to enter orders. And it's basically a simulated account. If you happen to do real well, it will become a funded account for you. And at that particular point, then any profits that you gain based on their rules, you get to keep 90% of it. So if you grow into it and you like it, it's a possibility for you. All right, so it depends on how you want to approach it, how you want to use it, and what style of trader you are, okay? So we're going to cover a couple little things to do with that. All right, let me come out of here real quick. I want to go and focus on a whiteboard for a moment here. So I'm going to bring up a white thing here. All right, and a couple things I want to cover. All right, so we're going to talk about ART, right? We're going to talk about the ART software, how it generates signals and so forth. So the first thing you need to know is there's 3 studies connected with the ART: the pyramids, the 1Bs, which we call, and the 2Bs, which are the ART reversals, and the color bars, which actually color the color bars itself. So the first thing I want to go over here, okay, are the pyramids. So let's go over here and take a look at those. So when a market basically starts to move up in trend, all right, I want you to think of the pyramids as something we use for trend trading. So when it starts to trend and pulls back, this is where the ART software is taking a close look at the pattern, okay, that was developed during this configuration. And so you have a left side and a right side. The left side is pushing up off a low, we'll call this low 1, and reaches a point where you get a high 1. Now, normally, this high 1 is usually represented by a fractal in the market. And a fractal in the market, if you take your hand and have your palm facing your face, you have 5 fingers, right? The middle finger is higher than the other finger. All right, so that would be a fractal pattern, an ideal one. There are other fractal patterns that aren't that clean as that, but the idea is usually what the software is looking is some form of fractal pattern and a pullback after that that gives you that fractal. All right, so it's a change in behavior. All right, then the market moves down, and at some place it finds support and starts to move off the support. Now, on the third price bar, the software makes a determination of whether this is a potential trend trading pattern coming up, okay? And so what it does is it starts to draw in a yellow colored pyramid, all right? And it anchors these points. It's using 2 points to anchor, the high one and this pullback area, okay? Which is the potential for a low 2, okay? So that's the setup. Now you don't actually enter the trade when the triangle shows up. It's just the setup. And the software is doing something a little bit extra. It's looking for the momentum on the way up, measuring it against the momentum on the way back down, and then once again looking at the momentum on the way up. Now, momentum is not volume. Momentum is how fast price moves over time. And you can have it on a little volume or a lot of volume. And the reason why we avoided the volume statistics in the pyramid is a lot of times trends very early on occur with low volume. So we don't want to miss those, right? So if the indicator, like the pyramids, just used volume instead of momentum, then they wouldn't form in the beginning of trends. It would be forming more after the trend is already in motion. We want to try to get in early, right? Okay, so we use the momentum calculation, and it does a really good job of ferreting out bad pyramids versus good pyramids. All right, so that's the premise. So when it anchors the high and the low after the third price bar off the bottom of low 2, it will either draw or not draw a pyramid, and it will not draw the pyramid if the momentum calculations do not add up. Now, the momentum calculations, that's the secret sauce, right? That's something I worked on statistically to see what works best overall. So those are momentum calculations. The other thing in the software, we have a number that you can change to adjust the momentum, okay? And that's called something else, but I'll show you what that is depending on the platform you're on. All right, so basically that's the premise of the pyramid at this point. Now, as soon as the yellow pyramid forms, and you can change the colors to these, I use sometimes blue, but as soon as these yellow pyramids form, we call them unconfirmed pyramids. And at this particular point, it's giving you a heads up that a potential trade could be coming. So what do? Well, the first thing you want to do is realize, well, where are you going to get in? Well, you're going to get in when prices come up and go above high 1. And why do we wait? Well, it's a trend trading indicator. So you have to remember, what's the definition of a trend? A higher high and a higher low. So when we break that pyramid again, we have a high 2, right? So we meet the definition, a simple definition of an uptrend. And believe me, sometimes in the market, simpler is better, okay? So right off the bat, you've met one of the qualifications in general technical analysis of higher highs and higher lows. Great. Also, too, the pyramid would not have formed, all right, if we didn't have momentum and some type of fractal at the top of high 1. All right, so we kind of covered both sides of the coin, right? Now, the other neat thing is this low 2 usually serves as an excellent point for your stop. So if you're going to use that for your stop, always go 1 tick or 2 ticks under, and wherever you enter, which will be 1 tick above the top of H1, which by the way we also call the apex, right? You've heard me say that. This is called the base leg down here, this flat part. I'll put BL for base leg. So the stop goes 1 or 2 ticks under low 2 or the base leg, and wherever you enter above the high 1 or 2 ticks over that, all right, that's going to be your entry. Well, now we have enough information, even before the pyramid is confirmed by prices going over H1, before prices go over H1, calculate your trade size. And then you could put a limit order in if you wanted to, 1 or 2 ticks over here. And when that gets filled, your stop can go immediately under the pyramid. All right, so it gives you a really great visual of what's going on. Now, pros and cons of a trend trading indicator like this. I don't care what kind it is. We're looking at the breakout, right? Okay, so the idea is normally when you get a breakout, you may be getting 1 or 2 price bars in that direction, and then you get a pullback. At that point, the stop is pretty far away, so you allow the market to pull back and then resurge. So when you're thinking about pyramids, you're usually not thinking about a fast trade. It's usually one where you're trying to catch a trend and you're going to be in the trade quite a while. So it's not a scalp. I would not call this a scalping technique. However, if you wanted to test and see, all right, if prices break above high 1 and that's good for 2 price bars, well, that may be a good scalp on a 1-minute time frame or something. So you have to test these things though. All right, there might be other things better to do with it, but it wasn't designed to be really it wasn't designed to be really a scalping tool. Okay, it's to try to get you in a trend. Now, so keep that in mind. It's a trend trading indicator. You have to have patience because when you get in it, the market could go against you. All right, so don't get all depressed if that happens. That's normal. All right, as long as your stop's not hit, the trade is not invalid, right? Now you may enter on the pyramid and not want to use the stop below the base leg. You may want to use another support level even further back. That's fine. Just make sure you calculate your trade size and put a lower trade size in. All right, so that's really important. Okay, so that's the pyramids, and you know we have both bullish and bearish, and you can put them on any time frame, any market. Now, if you're going to put it on something like a 15-second time frame, well, that's going to be pretty quick, right? But it's still not as quick as some other scalping techniques. I'll cover that in a minute. All right, next thing to cover are the 1Bs and the 2Bs. So we've covered the pyramids. Now let's cover these guys. Now these guys can be used in a variety of different ways. They can be used for scalping the market, and they can also be used for scaling in and out of certain trends. So they serve 2 purposes here. And there's a variety of different ways to do it. So the 1B and 2B, I want you to think as pivot points. Okay, so let's put pivots. All right, so when we talk about pivot points here, we're talking about areas in the markets, obviously, where you come up. I'm drawing perfect markets here. And let's say you get a 1B here. All right, that's the signal bar, okay? Now the 1B, when it occurs at the top of a market, this bar has to be bearish, okay? This bar has to be bearish. Let's just make it a bearish there. And it doesn't matter if you use candlesticks, open, high, and low close, it doesn't matter. I can tell you though, you're gonna wanna test to see there's different types of 1Bs. There's 1Bs with, you know, very long wicks, so to speak. There's 1Bs that can have, you know, something like that. So there's different types of 1Bs that can form. So you may want to test on your own based on the market you're trading, which ones you want to do, right? Okay, so keep that in mind. Very important stuff. All right, now, when you get a 1B, you're expecting a move in the opposite direction of the current thrust up, which is going up. So that's the signal bar. You do not enter when you see 1B. Don't go in, all right? Some things have to happen before you go in. And on the next price bar here, if it goes below here, then that could be an entry. And your stop needs to be placed above here. Now I'm going to say something here with stops, all right? If you're trading the NASDAQ, like on a 1 minute time frame of the NASDAQ, give it 2 ticks, all right? And don't put your stop at the same height as the 1B. The NASDAQ is notorious, especially for going up to that top and then crashing in the other direction. In other words, a bearish 1B could be accurate, but if your stop is not above the 1B signal bar, where we tell you to put it, all right, then you may miss the move that the 1B is indicating could be occurring. Okay, just food for thought, all right? So in other words, you may get something that moves down here, puts you in, it comes right back up close to your stop, right to the high here, and then moves down, okay? So you don't want to get stopped out, right? So that's a 1B. And of course, you have 1Bs in the opposite direction too. Let me just erase this here. And if you have any questions on this, feel free to ask. All right, you have bullish and bearish 1B. So if you had something coming down here and you had a 1B signal bar here, let me do that again. All right, so yeah, a 1B like that's what I was trying to do. Okay, 1B here, that's a bullish 1B, and this price bar would have to be bullish, okay? If it's a bearish price bar, it's not going to form as a signal bar. But remember, you do not take the signal, you do not take the trade when the signal bar appears. It's what happened after the signal bar that's really important. All right, now let's cover a 2B, okay? And then I'm going to talk about a few variations on top of that. So the 2B is one that comes up here like this. This is a bullish bar, so it can't be a 1B, but then we get something maybe like this that's bearish. All right, then what happens is the system is going to put a little dot above the signal bar and call it a 2B. This is the first price bar in the pattern. This is the second one over here. And it needs 2Bs to actually formulate a possible trade. The reason for that is a lot of times the second price bar, all right, and it's not always an inside price bar. Sometimes it could be something like this, where, let me redraw this. It could be something like this, where this is a bullish price bar, one bar is a bullish, and then this is like this. So it doesn't always have to be an inside price bar, right? Okay. So the idea behind this is when the signal bar shows up, you do not take the trade. It's what happens after the signal bar that's important. So your short trade on this case, or however you would use it, all right, would be 1 tick under here. Okay, so that would be the entry, and your exit is on top of the first price bar. Okay, that's the difference. So we want our stop at the high of the pivot point, and that's represented by price bar 1. That's why we don't put it on the top of price bar 2. And make sure it's at least 1 or 2 ticks over, and calculate your trade size accurately. Now these can be traded on very short 1 minute time frames on the NASDAQ, and we'll be doing that in our trading room on Thursday, okay? But that's kind of the deal. Now, again, there's also bullish ones like that too. Now, another thing that's interesting is that when you get a 1B, and I'm going to read, or a 2B, okay, and you start getting inside price bars inside the 2Bs. So we're talking about scalping right now, okay, for the most part. All right, so let's say we had a big move up here. Let's just say we had a 1B here with a nice, let's say it's a candle with a nice wick on it, and it's way down here. When I see those, I get really excited because that's a very powerful signal. You could go short as soon as you go below it, make sure that stop is 1 or 2 ticks above the high. Or if we start getting, and don't forget, this has got to be a bearish bar, but if we start getting inside price bars, okay, let's say we have a bullish one here, okay, all right, and then we get another one in here. The more inside price bars you get, the better the signal. These are also known as hoagies, right? Anybody ever hear that term, hoagies? All right. So again, I'm not going to go short on the break of the hoagie though. I'm going to wait until we break below here, and the stop always has to go above here. All right. Then after we've had like 1 or 2 price bars beyond the entry, then I start moving my stop down. Okay. And the same thing is on the other side. And you can also get for 1Bs, you can have even more than, it's 2 or more inside price bars are really important. Okay. So that's kind of cool. Now, that's using, these are scalping techniques, and the idea is when you're trading a 1 minute time frame and you only want 1 or 2 price bars of profit, okay, go ahead and do that. Now you're going to have, you're not going to be able to reach, just take my word for this, you're not going to be able to reach a 1 to 2 risk to reward probably on scalping the market. It's probably going to be like more 1 to 1. But your win rate should be like above 85% or 80% if you're good at this. So you don't need a 2 to 1. On this thing over here, on the pyramids, you need a 2 to 1. Okay. But on this here, this is scalping. 1 to 1 is good enough because your win rate is going to be higher. Okay. Just saying. The longer you stay in the market at times, all right, the more things can happen, which can lower that profitability win ratio, okay, win percentage. All right, so that's that. Now, I also told you could use two Bs not only for scalping, let's erase this, but also for scaling out. So let's say you're a trend trader and market moves up, moves down, moves back up, and you get a pyramid, right? So you go long with your stop under here when prices go above here. All right, moves up really good in your favor. Wow, but the stop for the pyramid is way back here. And then you get a 1B here. Well, if you go long, I'm just going to use the generic 1,000 shares, okay? If we go long 1,000 and we get a breakout below here, well, you might want to sell 300 shares, maybe 500 if you're at a key level of support or resistance. So you can use that for scaling out instead of scalping to the short side, all right? Likewise, if you have a pyramid here and prices are moving up, they pull back, you get a 1B here or nothing, but then pull back up and get a 1B down here. You can add to the trend as long as your stop is still not down here. You got to move your stop up under here, okay? Because you don't want to have more risk. So there's many, many ways, my point, of using our signals depending on the kind of trading you want to do, right? Okay, really important stuff. All right, now the final thing that the art software does is called the color bars, right? So the color bars, basically what they do here is they are actually coloring price bars. You know, when you look on a chart, whether it's it doesn't matter if it's a candle or an open, high, and low close type of thing. But you know, when you look on a chart and you see the colors of the candles or the price bars, right? Well, normally when you use it right out of the box of a charting platform, basically we'll take a look at a regular open, high, and low close. If it opens here on the left side, it puts like a little step over here. Where it closes, gets another step. All right, so this is the open, this is the close, this is the high, and this is the low. All right, so that would be a bullish price bar, all right, out of the package, because the high is above the close. Now, also, let's see this. This is where it differs from the way we look at things. If you close here, that's still going to be a bullish price bar on most systems because the close is above the high. In art, we look at it differently. We take a look at this price bar and it opened here, same one, okay, and closed here. All right, I'm just laughing because I don't draw a very straight line. Let me do that again. All right, We'll try one more time. All right, so this is a price bar that goes like this. We have the open and we have the close. All right, so there we have it. So on the ART system, this would be a bearish price bar. So this would be a bearish and this would be a bullish. And here's the thought behind that. Here's the reason why we do it. Well, if the bulls after the open drove the price bar way the hell up here, then why wasn't it bullish enough at the close of the price bar to keep it up there? Instead, the bears came in towards the end of the price bar and pushed it down. And what we do is we take a look at the 50% line based off the difference of the high and the low. And if price bars close below that 50% line, no matter where the heck they opened, then the bears were in control at the end of the price bar. And that's what I care about. Does that make sense? And vice versa, okay, for the other things. This is important to know because the 2Bs and 1Bs are using this definition for bullish and bearish price bars. So as you trade along, you may start to see, well, gee, that price bar was bullish here, but I got a bearish, 1B here. Why? Well, it's because the close was below the 50% mark, therefore generating a bearish price bar according to ART, applied reality trading, okay? And again, it doesn't matter if you use candlesticks or if you use open, high, and low. Usually when I'm trend trading, I use open, high, and low. When I'm scalping, I kind of like the candlesticks because I like to see the wicks, okay? That's just a personal preference. So that's basically how the software works, and how you apply it is the art of trading, right? Which is why I kind of use the ART as one of those kind of like funny ways to say, okay, the applied reality trading is what ART stands for, but also it's the art of using it, which will depend upon the type of trader you are, okay? All right, so that's what I have for today, all right? I wanted to cover that because I get a lot of questions on that. Now we have other indicators that we can add into this that help us confirm a signal, influence our ways in which we're going to actually enter and exit the market. And that's the OWL, PTF, and even the TLM and ERI at times, right? But this is the basics of price pattern analysis. So this allows you to trade the market as it unfolds. All right, any questions? Thank you, Frank, appreciate that. All right, well, that's it for today then. And I want to thank everybody for coming, great turnout. And next week, we can pick up, maybe some of the indicators and how to use those in conjunction with ART. But in the meantime, practice with it and have a good time with it. All right, everybody, thank you for coming. Have a great rest of the day. We'll see you back here next week. Thanks so much.